Gold and silver have been going crazy lately, with gold ripping above $4,300 an ounce and silver crossing $50 an ounce. And people have been trying to understand why. And I think we're starting to see what's actually going on. The suits in London are getting caught naked shorting metals that they don't even own. And India and China are calling their bluff.
Pop's tripping, man. You want me to ask for my bike back? You know I wouldn't trip. What bike?
It's like a heist movie where they show up to the vault and there's nothing in there. The vault's empty, the market's panicking, and Wall Street is finally realizing they've been selling gold to central banks who aren't playing their game anymore. This morning's opening is proof. The cronies at JP Morgan understand that they have to keep silver's price suppressed in order from having it running to $60 an ounce. This is a global margin call on fake money. Fake money like we see in the Cayman Islands, whose GDP is $7 billion, but somehow they have $1.8 trillion in US Treasuries, the largest foreign owner of US Treasuries in the world. Something's not adding up here. My math ain't good, but this ain't adding up. This episode isn't explicitly about Bitcoin, but it is. We've been telling you that the fake financial system is imploding, and right now it's starting to happen. Gold and silver are having their Wall Street bets moment, where central banks are calling the bluffs. And the question isn't whether Bitcoin will have its Wall Street bets moment, where the Redditors are going to call out the creditors. It's when Bitcoin will have its Wall Street bets moment. And when it does happen, what will the price be? This is Dante Cook with Bitcoin Simply. Let's go. London and COMEX have been naked shorting silver and gold for years. They sell you what they don't own and betting that you'll never ask for delivery. Well, central banks have been calling their bluff. Gold and silver exchanges in India and China have been pulling up on London like Big Worm and Friday. India's biggest silver refinery literally ran out of silver. And that isn't by happenstance. That's been because it's been controlled. There have been reports that India and Chinese exchanges have been working together to swap and add to their gold and silver reserves without letting the rest of the world know. They've been doing this behind the scenes for years, and now the BRICS countries control the majority of the world's gold, where the financialized credit-based systems in London and the United States are being caught off guard. Physical demand is outpacing the paper game. And you start to see that the financial system that we've been living in is all fake and super financialized. When you look at a market like the Cayman Islands, a $7 billion GDP country has $1.8 trillion in US Treasuries, the largest foreign owner of US Treasuries in the world. And somehow, hedge funds account for a $1.4 trillion black hole that the Fed somehow didn't recognize. Hedge funds are running the ultimate shell game. They're buying treasuries, shorting futures, rehypothecating, and that means they're passing the same bond around like a hot potato. And this is how you can have a discrepancy where the official data says $423 billion in the Cayman Islands, but now they have $1.8 trillion. This is leverage stacked like Jenga. And one wrong move sends the entire tower crashing on itself. We've seen the clips from The Big Short. The Fed has no clue how levered the system actually is. And when things start to hit the fan with what's happening in private credit markets and hedge fund markets, you understand that's why hedge funds get bailed out. And this is why the dollar is losing trust globally. When Lagarde is hinting at the dollar losing its reserve currency status, you know the system's bad.
You have also said recently that you think investors have begun to question whether the dollar would still warrant its status as the ultimate safe haven currency. I mean, the American dollar is one of the strongest weapons, frankly, that the administration has to use. Do you think that it is the rise of cryptocurrency that is most threatening to that, or why are you worried?
I see signs that the attraction of the dollar is slightly eroded, and future will tell whether there is more erosion of that. But when you look at the rise of cryptos, number one, when you look at the price of gold, gold is typically, in any situation, the ultimate destination for safe haven. Price of gold has increased by more than 50% since the beginning of the year. That's a clear sign that the trust in the reserve currency that the dollar has been, is, and will continue to be, is eroding a bit.
This is the chart of the year. Central banks now own more gold than US Treasuries. They've always recognized gold as a superior safe haven, but not as a speculative tax asset. This is all happening at the same time that the dollar is losing trust. And as people are beginning to see gold as a store of value, they are also increasingly seeing Bitcoin as a store of value. People like Mohammed El Arain, who used to be one of the largest buy managers in the world when he ran the desk at PIMCO.
Bitcoin, the pyramid I just described for gold of central banks, then of institutional, and then of speculators. For Bitcoin, as you heard Anthony say, it is still evolving, meaning that the speculation side is much larger than for gold, and then the fundamental side is still smaller. So Bitcoin is going to be much more volatile. It will not have as yet the characteristics of gold. It needs to develop this fundamental holding, which it is doing, but it is way behind gold.
I disagree with him when he talks about how slowly he thinks this is happening for Bitcoin. I'm more in the Scaramucci camp. I believe that it's happening faster than people think. Bitcoin is going to reach gold parity like this.
And I don't think you fully have gotten the adoption curve going from the institutions. You think about it now, since BlackRock started that ETF, there's legions of people out there selling the idea of Bitcoin as a piece of your overall portfolio. Is it a 1%, 2%, 3% piece? It's way more for somebody like me, but I'm just saying that selling cycle is taking longer. And frankly, older people, if you look at the demographics, older people have money. And the older people are like, I'm going to buy gold as a potential hedge as opposed to Bitcoin. But just imagine the 35 or 40-year-old 10 years from now, what are they going to be buying? It's the same statement I would have made to you back in 2000 related to tech. You know, the 36-year-old that was getting buried in tech in the 2000 dot-com bubble, if he stayed in tech, he had the best 25 years as an investment class. And I think Bitcoin, we'll be looking at Bitcoin 10 years from now, scratching our heads saying, yeah, it did what we thought, at least the Bitcoiners thought. It got to some level of parity relative to gold. It won't get there right away. Still, a lot of people don't like it. I don't know. Maybe it is a cockroach. Yep. But let me tell you something about cockroaches. Okay, cockroaches are going to survive us.
Yeah, no matter what.
So in a weird way, I think the metaphor of a cockroach may be a good thing.
Scaramucci is positioning himself for the future. What we're seeing right now in gold and silver is the same scam that we've always seen. As we move into a digital world, when the digital paper Ponzi is called, everyone is going to sprint towards a real digital asset. And Bitcoin is the only real asset in cyberspace. We're not going to be hauling metal around the globe if we move forward. You have to understand this. Bitcoin is going to be the backing of the new stablecoin-based system. And Bitcoin doesn't play their game. There is no fake collateral when people call their bluff. You can't print it. You can't counterfeit it. It's energy backed with a fixed supply that's auditable 24/7. So when people start demanding delivery on the truth, they're going to turn to Bitcoin. And this is your alpha. This is your opportunity. The time between what you know is different between what everyone else will know in the future. And when everyone else knows that Bitcoin is the end game to the end of this fiat game, well, the price is going to be $10 million a coin.
If people in the rest of the world knew what I know and they understood and they agreed with me, Bitcoin would go to $10 million tomorrow. And if Bitcoin went to $10 million tomorrow, I want you to think about how you would feel and how your viewers would feel, because you would lose 20 years of stacking opportunity during which you get to buy at less than $10 million. So the difference between $10 million and 100,000, that's what you give up if the volatility goes away and people start to agree with you.
When the price of Bitcoin does in fact reach gold parity, $1.5 million a Bitcoin or $10 million a coin, like Michael Saylor just said, you're not going to want to sell your Bitcoin. You're going to want to borrow fiat against that real dollar asset, just like when you have equity in your home. Ledn has been the leader in allowing people to unlock value in their Bitcoin without selling it. If you want a $1,000 fiat loan, you post $2,000 in Bitcoin collateral. There's no credit checks. Bitcoin is the credit that they need. And it's not rehypothecated or lended out, it's held in cold storage. Fiat gets into your account in less than 6 hours. The loan application takes just 2 minutes, and they start at just 12.4%, about half of what a credit card costs. Don't sell your Bitcoin. Go to learn.ledn.io/simply to get started today. One of the ways that you can demand that your Bitcoin isn't fake or rehypothecated is you pull it off of exchanges and verify it for yourself. That's the way that you take physical delivery of your Bitcoin. And to learn how to do this confidently, safely, securely, and privately, well, schedule a free 30-minute consultation with the team at the Bitcoin Way, the leaders in helping you to protect your Bitcoin the right way, and to help you to call a bluff on the fake fiat Ponzi scheme system. Schedule a free 30-minute consultation with their coach, and they'll talk to you all about this and help you to learn how to protect your sovereign wealth the right way. Head to thebitcoinway.com/simplybitcoin to get started. We study the best after they become the best, but we don't actually do the things that the best or the most rich or the most famous or the best entrepreneurs are doing when they're actually doing it. We've got people like Michael Saylor, Stanley Druckenmiller, Bill Miller, and even Ricardo Salinas, billionaires out there who are telling us exactly what their playbook is. And Ricardo Salinas gives you his portfolio and tells you why he believes that Bitcoin is the future.
You're well known as a crypto enthusiast most of the time.
Except on days like this.
What's your exposure now on crypto? Are you still all in or a little more cautious?
Well, they're all in because I have a lot of companies, right? So my source of wealth comes from my companies. We make money and they're valuable. But in my personal portfolio, the one that I manage myself and that I get to call in what asset I'm going to allocate to, yeah, I'm pretty much all in. I got about 70% in Bitcoin related exposure and 30% in gold and gold miners exposure. So 70-30. That's it. I don't have a single bond and I don't have any other stocks except my own.
Right. So on Bitcoin, I mean, I think we're down about 20% since the Trump inauguration after a big rally post-election. So buy the dip or wait?
Bitcoin, you have to think 10 years and buy everything that you can. It's not going to go anywhere except up because the dynamics are such. It's the hardest asset in the world. There's only 21 million of those tokens, and 20 have been distributed and mined already. So there's going to be 1 million more from here to 2040, I think, 2140. So it's the hardest asset. Not even gold is this hard. You know, gold gets inflated at about 3% a year through additional production from mines. Bitcoin doesn't. So yeah, it will go up and down, and there will be speculative frenzies, and people will talk about it. But what most people should do is average dollar cost average, which is, you know, have a program where you can buy so much per month and you buy every month, and that will take the uncertainty away and never sell it.
I don't take information like this for granted. Billionaires like Ricardo Salinas typically have more access to information than you and I. The leaders that we talk about are leaders that they actually talk to. They see the writing on the wall. They start positioning themselves like Ricardo Salinas with a 70% Bitcoin and 30% gold portfolio. They know the end game. They know what's happening. Physical commodities are having their Wall Street bets moment. And it's only a matter of time before real Bitcoin calls out the paper scams that exist in the fiat land. The question is, do you have the patience and the conviction to execute on this trade? The real Wall Street bets moment is coming. And when it does, Bitcoin won't be 100K, 250K, but we'll be talking about $1 million Bitcoin, $5 million Bitcoin, $10 million Bitcoin. Stay calm, ignore the noise, stack hard. Because when the fiat game ends, the hardest asset wins. This is Dante Cook with Bitcoin Simply. Happy stacking. And if you haven't already done so, subscribe to the channel. And if you haven't already bought your tickets down to the largest Bitcoin mining expo in the world, Mining Disrupt, happening in Dallas, Texas from November 11th to November 13th, get your tickets and use the promo code SimplyBitcoin for 20% off. Have a good day, everybody. We're out.